All right, so let's get started. The first resource I will tell you to take advantage of is this resource I created, which basically compares QuickBooks Online, Pro, Premier, Enterprise, feature by feature, and whether or not it has it or not. So that's the link, and I'll show you what that looks like real quick. Okay, and this is many, many hours of work put into one spreadsheet. So I know that some folks have similar spreadsheets like that, but I just think mine is better. So, yeah. So according to the slides, it should be on the slides, is bit.ly/case sensitive QBO uppercase and then VS like versus QBES uppercase.
The slides aren't available with them.
They're not?
I had a Woodard email it to, they're there, they just didn't upload it. So if you email Woodard, info@woodard.com, they'll email you the slide deck.
Right. I mean, I have them too. So what I'll do is right after the class is done, I'll upload them to my website. Okay. So that link is something I recommend you have. It has over about 140 or 50 features of all the QuickBooks platforms. You can actually, if you download, you can download it. You can run a filter, and then under type, just choose inventory, and there's about like just 60 features just on inventory that are compared. You know, does it have it, does it not have it, does it partially have it, that sort of thing. So that's a resource that it just becomes really useful, especially when you're comparing. I mean, I don't think it is a fair comparison at any point in time to try to compare QuickBooks Enterprise with QBO and inventory anyway. I mean, I don't even know how you would have that conversation simultaneously when you're making the choice between one or the other. But clients are always asking for a cloud type of solution. So let me start with, while I launch QuickBooks here, tell me about, and Karen already told me some of the issues that she's having with lot numbers, and we'll see if we can successfully cover any of that stuff. But can I just go around and a few people can just tell me what general issues you have with inventory or general challenges, or maybe something you want to get out of this class? Anyone in particular I mentioned? No? Okay, yeah, sure, yeah.
We actually got a new prospect that we're trying to use service items for job costing or project costing.
Okay, service items for, okay, nothing to do with inventory in this case, or yes? Does it become?
The service items are, but you can't get it to show up on the job costing.
That's not inventory.
Let's go through the issue, right? Because all of us will have an opinion here on that. So you're using a service item, and you're using it in a bill or in a credit card or in a check, right? And that service item is pointing to an expense or a cost of goods sold account. Correct?
It goes to balance sheet.
It goes to a balance sheet account, and then you can get it to show up in some sort of WIP report.
On the job cost detail.
Okay, the job cost detail report. Well, I mean, right off the bat, because it's going to a balance sheet account, that would say that would be the issue. Yeah. Yeah, I mean, I don't see what else would be. That's not.
It's a double-sided item.
No, I think it's because it's hitting the balance sheet account. I think I can do. We have like an hour break between the two.
I have it on the left.
Yeah, so we can. Yeah, so
You can
Yeah.
filter the report.
it won't show up under no
You
item.
have to change the report with the filter to show all accounts, not just profit and loss accounts. Okay.
Yeah.
You just need to use contractor version and do it as an estimate versus actually, it shows this month.
Right, but he's talking about a job cost report. So like a job cost detail report. Right, that would be different. Yeah, so what she says is actually right. If you do an estimates versus actual instead of a job cost detail, and that shows up there. Right, with the job cost it wouldn't, because it's technically not a job cost. Because a job cost report by default only shows up income statement accounts. So maybe I never tried to put it as a balance sheet account, but.
No, but you do that for a WIP account.
Yeah.
If it's a WIP account, it's in your balance sheet, so you have to filter it.
Okay, so let's go through the standard inventory workflow process. Okay, so the first thing is, and we're gonna get to a feature a little bit after as we do the example without of receiving the inventory with the enhanced receiving. And I have a whole bunch of things to say about that, and I'm going to give you some warnings. But the standard way of doing QuickBooks inventory workflow is we possibly, if we're ordering for stock, we'll start with a purchase order. But if we are not ordering for stock, we're gonna place a sale that we already have in stock. Oh, we're gonna place a sale for something that we may have in stock or not have in stock, but we're gonna order because we placed the sale. We normally will start at the sales order process. Okay, for most of you that are familiar with the platforms, you would need to have Premier or above to have sales orders. So you always start with the sales order process, and we're not getting into the advanced stuff yet. Okay, so we start with the sales order, and then we select the customer that we want to sell to. Now I'll give you a quick. So I'm gonna do all the shortcuts that I know as I do this. So maybe some of you guys know it, some of you guys don't. But let's say, for example, under Peacock, I want to create a new job. So the fastest way to create a new job under a customer is to type a colon right after the customer's name, and the column won't show up as a character. It did take it, by the way. You don't have to do it again. So I did a column. So I did Shift and column because the column is actually on the top of the keyboard on the key itself. And then I'm going to call this one home or something like that. So basically, all we're doing is we're creating. And can you see in the back? You can see. All right. So we're creating the customer jobs name right on the fly, and then I'm going to hit Tab. And then I'll click on Quick Add, and it'll create the job for me real quick. Okay, so that's a sort of a quick way to create a job. Most people just go to new job and hit a bunch of clicks. And a lot of times when you're creating a new job, you're just trying to get the job out, right? And then you're going to go back and put the details after. Now, one thing that's really important, and let me just go to the customer list real quick, because this is actually very common when we deal with our customer jobs, is when you create a job under a customer, this is under Peacock. When you create a job under a customer, all the details are under the customer name, on the parent name, addresses, phone numbers, and that stuff. All that stuff will come about automatically, even if you do a quick add. Okay, so if you're creating a lot of jobs and you're wondering where is this information coming from, because a lot of folks work with jobs and not with the parent itself, and they forget that the parent has some old contact information. It all gets it from the parent. Okay, so that's when you create a job on the fly. Now, one of the reasons I recommend people to create jobs, even for inventory purchases, is because many a times I work with clients that do prepayments. And QuickBooks does not have a good prepayment management system, prepayment for customers or prepayment for vendors. So the closest thing to a good prepayment system would be splitting off the jobs. Now, for customers that don't actually have job names, what we end up doing is, as we create the jobs on the fly, I just copy the sales order number and make the sales order number the job name. Does that make sense? But that's going to come in very useful when we're dealing with prepayments. Okay, because there's no way to link a prepayment to a particular order. So the closest thing to that would be the job name. So if you are not creating jobs with names, you're creating jobs just to track the finances of each order, then you would create the job name as a sales order and make that sales order sort of the most important number that you'll be working with. So I would basically just copy that number and put it here under next to the customer's name, paste it there, hit Tab, Quick Add, and that would be my job name. Okay? All right. Then a really important piece here, you see this class? Now, when you have a class up there and you select the class, that class only belongs to the header of the transaction. So if you put a class in the top of a sales order, for example, or an invoice, and then you have a class column down here, and you select your items, and you don't select the class here, none of those individual items will show up on the report. But if I disable the class column in the sales order or in the invoice, and I do have a class up here, QuickBooks will automatically fill the class with whatever the class is in the top. So, all right. So the class is extremely valuable for reports. Okay, one of the most common things that we do is QuickBooks doesn't have product categories, so I can't create groups by product categories unless I use sub-items. So the classes become the most useful tool we have to create grouped reports by categories, which will be classes. This column is open here. So as you notice, it has an empty column. If I select a class up here, and I select nothing down here, those items will be classless. So when I run a report of those items, they're not going to show up under class, even though there's a class up here. So QuickBooks will not autofill the class in the top to the items unless that column is disabled. So if that column is disabled, QuickBooks knows to put the class that's on the top header into those items. Okay? Now, I'm going to go into item and I'll pick a couple of items here. So I'll pick the handspring and I'll pick the anchor and we'll do 20 and then 50. Now, a couple of things that a lot of folks don't take advantage of. And in this particular case, and this is, the file itself may have these as out of class, but I do find it that there are cases in which you will have a class in the top and those columns stay blank. In this case, they're auto-filling, so it's fine. But just make sure that the class that's up here will be different than the class that's up here. So if you run a report of sales, a sales report, an item report by class, it's always going to be driven by the class and the line item, not the class in the top. The class in the top would just be for a sales order report by class, right? The overall sales order, not the individual items in the sales order. Now, this little button here, this is the button that's hidden under the order box. That's only when you actually hover over it. So when you hover over it, you see that box. That box will actually give you the current availability, right? So the current availability will give you quantity on hand, quantity on sales order, and reserve for assemblies. Now, reserve for assemblies is what? Does somebody know what that is? I'll shout it out. Yes.
Pending bill.
It's a pending bill, right? So that's only stuff that's in a pending bill.
Right.
Now, the crazy thing about this is that's a pending bill as of any date,
Right.
including future date pending bills. So that can really complicate things if you have future bill. So I have one particular client that creates pending bills in the future as an exercise, right? Oh, I want to do this to see what it will look like, but then it will reserve them on the reserve assembly, right? So and that could be purpose, that could be on purpose, or maybe not. So it's any date or all dates. Does that make sense?
Right.
Okay, then here where it says show details, this is where you can see associated transactions with that item. And this is mostly on the purchase order side and on the pending bill side. So if I click on the pending bill, I see all the pending bills that are affecting that 850 that's showing up right here. Now, this right here, let me go back to purchase order. This right here is one of the most important dates in all of QuickBooks when it comes to inventory management. And almost every one of my clients fails at this. Expected date is a hidden field in the default purchase order template that if you don't know to turn it on, you're not going to be using it. So that date, usually for most people, equals the purchase order date. So a lot of folks don't have the discipline to open up that date, and I'll show you exactly what I mean. Open it up in the purchase order and plan for that delivery date. So when you're ordering something or you're trying to figure out whether you're going to have it in stock by the time you promise your client, that there is going to be a purchase order that's going to fulfill that. So if I actually double click on that, it will take me to the PO. Now, this right here is called the expected, this is right here, it says expected due date. That's actually terms field. That has nothing to do with the actual expected delivery date of the product. That would be the expected payment date based on the terms that are there. So a lot of folks get confused about these dates. Let me go back for a second. This is the current availability window, right? Which is telling me all the purchase orders all the purchase orders that have that item, which currently is 100. You see it, right? So we have 100 items pending. Let's say, for example, this client wanted to buy 2,000. So I gotta figure out, do I have enough? So I have 100 pending, and according to this, it's coming in on the 14th. Where is that date coming from? Well, I'm gonna double click on it. The purchase order says expected due date. Those are my terms date. Those are my payment date. Nothing to do with expected delivery date. It's actually pulling the expected date the same as the purchase order date, which makes no sense. So you actually have to go to formatting, customize data layout, and you're gonna have to go into expected. You have to turn that on. You don't have to show it to the vendor. In some cases you want to. If you pre-negotiated a delivery date with the vendor, you said, hey, I need to have it by Friday. You probably want to send a PO where it says that you're expecting it by Friday, right? And this is expected for you to receive it, not expected for them to ship it. Okay?
Is there the same symmetrical field on the sales order that you could have line items with different expected ship dates?
No, so the expected ship, it's actually called ship date. The ship date on the income side, on the sales order and an invoice, is just a header field.
In this case, it's a line item field in the detail.
No, this is not an item field.
No, this is the header.
This is header.
You see the tab, it says header. So whatever is in there is on the top part of the form. And that's, yeah.
Oh, okay.
So,
So, and
right,
then maybe hover over where it says header, at the top of the field,
right there.
right there.
Yeah, so that's header.
Header. And then the columns field is what affects the line item.
Yeah, yeah. So just real quick, and this boils down to reports. Give me a second. So anytime you run a report of the source transaction, so a report by invoice, report by sales order, right? A summary report, most of the data that you're seeking is going to be on the header tab. But when you run a sales report or an item report, and all sales reports are item reports, by the way, because sales come from the items, not from the header, they're going to be in here. So if you're thinking about entering data that you're going to filter or run a report with that information, you have to think about, the type of report that you're going to be pulling to then understand where that field should be, assuming you're going to create a custom field. So for example, if you wanted to have estimated shipping dates on sales transactions in the items, you can create a custom field, right? You can't filter it, but you can create a custom field, and we could essentially create reports with an expected delivery date per item, but it will all be custom fields. Now these are not custom fields; these are all the built-in fields. So we went to this one called expected. We enabled it. We hit OK. Sorry, getting over a cold. So the delivery date here would be the expected delivery date. I probably should put their expected arrival date. As a matter of fact, let me change that. This should actually be called expected arrival date. Right, to make sure that the user also knows what they're doing. And I'm going to date this on, let's say, January 6th. Sorry. I could not cancel this class because I have to do it. So, all right. So now you notice that the new expected date on the current availability window is January 6th. Does that make sense? Right there. Okay. So that particular field in QuickBooks, which cannot be modified, cannot be changed. I can't change the way the screen looks. It is giving me a really valuable piece of information that's valuable at the time of ordering or inquiring on whether or not I should order some new product. And not having that date preset on the PO will hinder you from being able to use this tool. So now that information, you can use it to make a decision on. So we'll hit close. Okay, so any questions on that? Man, okay. So I'm gonna go ahead and hit save and close. And there's my sales order. Now, let's go to a really important report. So if you have any clients that you're supporting with inventory and you're getting them through this workflow, you want them to start with a sales order, but you also want them to always proactively be pulling their open sales orders report. You actually want your clients to manage their business with open sales order reports. That's something that you should always be doing. So we're going to reports, sales, and we're going to open sales orders by item or open sales orders by customer. Open sales orders by customer will pre-group it by customer and by job. It will give you the sales order number. It will give you the total amount, and it will give you the open amount. Now that open amount has to do with whether or not it's been invoiced. That has nothing to do with whether or not the customer has paid. So I have a client that will receive a prepayment against that job, and it says still open, and they're saying, why is it saying open? It's because this is not giving me payment information. This report will never give me payment information. It tells me how much of it has not been converted into an invoice. Okay? Now, I actually don't like this report. Okay? I actually like a better version of this report. It's a report that I built from scratch. So let me show you the open sales order report that I create for my customers. I go to reports, custom report, custom transaction detail. Then I click on dates. I'll click on all dates. Then I click on filter. I'm going to go to posting status. Now that's the one that a lot of my friends and colleagues forget, that sales orders are non-posting transactions, and QuickBooks by default only shows posting transactions. So if I want to show sales orders or estimates or POs, I have to go into my report and say non-posting. So I do non-posting, then I'm going to look for transaction type, and then I'm going to select sales order. And then just for the heck of it, I'm just going to hit OK. So that's going to give me all my open sales orders. No, this is going to give me all my sales orders, period. Okay? Now this is going to give me both the debit and the credit. So it'll give me the header and the columns, or the header and the summary, or the detail and the header and the details, or the items. So in order to get what we want, usually with this, depending what we're trying to achieve, we would probably, if we're going sales order by sales order, we would go to detail, and then we'll go to detail level, and we'll do summary only, and then we hit OK. Okay, so that gives me an open sales order report that I can control a little bit better than the default one, because I can sort this in whatever way, shape, or fashion I want. I could also add custom fields, and I could also total it by customer if I wanted to. Okay, now if you wanted your open sales order report to be an open sales order item report, not a by order, you would change the custom report, go to filters, and instead of doing detail level summary, you would do all except summary, because I would not bring the header, it would only bring the details. And then we hit OK. So then that would be all of my sales orders by item. Now by default, items are not showing. So I would go to custom report, and then here in the columns, I'll type item, open that up, and then I'll type quantity, open that up, and I'll type rate or price. I got to figure out which one is going to be, sales price, and then hit OK. And then I can get rid of some of these things as I need them. I can group them by class, whatever I want. Okay, so that would be an open sales order detail report that contains all of the items. Yeah, these reports are usually in one direction. Yeah. Yeah, so these reports usually show on the natural state of the direction of the debit or credit. So in this case, this is going to be a sale, so it's going to be a credit. Yeah. That makes it confusing for sure. Yeah, it makes it confusing for sure. Okay? All right. Now, you will never get a sales order to show profit, right? You will never get a sales order to show me cost of goods sold, just because cost of goods sold is calculated on the day that you create the invoice. So you're never going to get this in a profit, like a sales price cost. You can only get a sales price on this. Okay? Because I have a client that asked me for my potential profit on sales orders, and I potentially couldn't help him. Okay. So, and also we had, there's another really important column called open balance. In this case, open balance. And then that open balance here will tell me whether or not that sales order has open items. Now, what does an open item mean? Let me open up a sales order. Open item means that at least one item has not been fulfilled, including non-inventory items. So if you have a client that creates these random service items with no value, just a weird description, so they can add their wire transfer information, and they don't close it, they don't invoice it, it will still show as an open sales order. Now there's two ways to close a sales order. One is to actually invoice it. The other one is to click here, mark as closed. Now anyone that's been in this business for a while and dealing with QuickBooks Desktop Enterprise, sometimes we're afraid that that button doesn't actually fully close them. It's just some sort of an issue with like the way QuickBooks builds their tables and stuff, but it's supposed to. So if you actually click on mark as closed there, and now that it says close and I hit save and close, this one should go away from the report. Okay, refresh. Okay, like in here it did not. Yeah, that happens quite a bit. So if you run into a situation like that where you actually manually closed it, you would have to like sort of reopen it and then invoice it, or delete the item. Yeah.
Do you have that report that always give you sales orders that are open? I wasn't sure that you had actually gone back and done the status of whether or not. I think you have all sales orders on that report, don't you? Yes, you do. Yeah, I was gonna say that.
Okay, let's try that again. All right, let's try it again. Yeah, so I get it. So this is showing me all my sales orders, including the ones that have open balances. Okay, so this one right here, the one that has the 151.73. Thank you for pointing that out. That one is probably one of the items that's open here. Give me a second. Let me refresh. No, because it still shows open. You see that? No, it's still the same issue. You see how there's a negative open balance of 151.73, even though I closed it? Yeah, that's one of the really strange issues with the way this report gets constructed. But, so, it's a good segue though. But, when you click on Customize Report, and then you click on Filters, does anybody have a cough drop by any chance? Yes. Thank you.
I was wondering if I could.
Yeah.
Sure.
I'll take that. Yeah. Hey. You try cough drop.
I've lost.
Yeah, no, I came with a conference with nobody, so it's not me chit-chatting, I've been very quiet in this conference.
I actually have noticed.
Yeah, thank you. Thank you. I've been more quiet than normal, much more quiet than normal. But, Mr. Biden, thank you.
You're welcome.
Thank you for your clemency. Okay, so one of the filters is open. So this is called paid status, and this is a little bit counterintuitive because paid status really talks about whether or not it's been paid. But in the sales order world, paid means it's been received, or it's been converted into an invoice. So either will show you both, and open would only show you the specific line items in the sales order that have not been invoiced. When I hit OK, it should make all of them go away, except for whatever random reason, one item that we forcefully closed instead of converting into an invoice. And Karen can tell you, she doesn't. This is sometimes it works, sometimes it doesn't.
Which line item is one?
I think that bracelet or something is 1, 2, 3, 4.
Yeah, so this line item here,
Fourth line down, I think.
pulley BR. The pulley BR, which is this line, was previously open, and I had force closed it by clicking on the force close. Yeah, so my recommendation to you is, this is a known bug of QuickBooks Desktop in general, is if you create a sales order partially into an invoice, and then it turns out that you're not going to fulfill that other piece, go back in the sales order and modify it, or delete the line. Because that close feature is supposed to get rid of it, but it's like a 50-50 chance. Yeah, it's just a weird thing of the way how QuickBooks behaves. Yes?
If you do a rebuild after that, does it still show significant?
No, if you do a rebuild, they'll fix it.
Oh, okay.
But I mean, I can't tell you that, oh, don't worry, just do a rebuild. No. In most of these cases, we have 10 users working simultaneously. These are 1 gigabyte files. It'll become like a weekend job to rebuild something. Right. Yeah. So the rebuild actually does it. We're supposed to. Right. Well, who does rebuilds here? Right. All of you do rebuilds, you resort the list, correct?
Yes.
Who doesn't know what that is? Okay, good. So I'll cover it anyway. All right. It's extremely important.
Worth repeating.
Yeah, so in the list and item list, so most rebuilds that we're doing on these files are because of humongous item lists. Also big customer lists are part of it. Before you do a rebuild, you always should include the inactives here, like this, and then click on item, resort list. And depending on how big that item list is, that could take a minute. It doesn't really take that long. So before you do a rebuild, you wanna resort all your lists, especially your item list. And that actually helps through fixing that. Okay, so there we go. That's the sales order, and there's that ship date box that we were talking about. That ship date box is the one that would, in a report, let me know when I'm expecting to ship the invoice. Now, I mean the sales order. Now that ship date should technically be the invoice date. Okay.
You give it to me something else, I'm making invoices, I have trouble making the invoice for like the down payment, and then it puts the ship date as the invoice date, but we didn't ship anything yet. So
Right. You're saying that yours, for some reason, automatically changes the ship date on the sales order because you created an invoice? That shouldn't happen.
when I create, I invoice
Yep,
for the down payment.
right, for an item that points to to a balance sheet account, correct?
Right.
Yep,
But in the ship date field, it always copies the invoice date in the ship date.
yep.
So how can I get rid of that?
No, the ship date field, by default, if you don't touch it, it will have the same date as the sales order date. So if you create an invoice on a different date, that ship date field doesn't change automatically.
Well, here I didn't create a sales order for the down payment. I just went straight to invoice.
And that's what it should be. Like sales order for down payment doesn't really make much sense.
Right. So I create the invoice for the down payment.
Yes?
And then it goes in the ship date and puts the date of the invoice. I don't really want any date in the ship date.
Yeah, I don't, but I just delete it, but I'm trying to understand how this stuff is automatically doing something for you that you don't want. I don't see it. Like I don't see what QuickBooks is doing that's getting on your way, because QuickBooks is not really doing anything.
Did you make a template for like an invoice for a deposit? And on that template, you go and format it and don't have a ship date? Okay. Could you do that?
Okay. Well, how do you, are prepayments important to you guys? I can cover prepayments real quick. Prepayments to me are extremely important. So let's say we talk about a sales order that we're creating with that 8805 sales order date. Let me find the one I already had in there. Okay, so I created I created a job with the sales order number in order for me to manage prepayments later on. But the correct way to manage prepayments is you're gonna have two things. You're gonna have an invoice that's gonna receive the payment, right? And then you're also gonna have an invoice that's gonna fulfill the product without the payment. You with me on this? Okay. So the best way, and this could be one of the just like cool workarounds that you guys learn here, hopefully, is let's say, for example, I have an item called upfront deposit, which I don't know if that's pointing to the balance sheet account, so let me just double check that it is. It is, okay, perfect. So I'm gonna put upfront deposit here, and I'm gonna put the entire invoice amount, the entire sales order amount. So it's 886.50. And then I'm gonna create a second line item with the exact same item, upfront deposit, and we'll make this negative 886.50. Okay, that doesn't affect my sales order, but what it does is sets up my documents in the future. Okay, so on the description here, just to make it easier, I'm gonna put here prepayment received, and you can do this with a group. If you create a group or something like that, could work. And then prepayment applied. Okay, so if you were to do something like this, it actually works really nicely. Okay, so I create one item that points to my deposit account that's positive, one that's negative, both zero out on the sales order. And then let's say, for example, that I'm gonna now just invoice the payment for this, right? Because that's how prepayments work, right? So on December 15th in this case is the day that I told the client I'll ship them, and they're gonna pay me 100%. So I'm gonna go to create invoice, and I'll select selected items. And in this case, I will only select, unselect all. Only need to select the one that has the positive, which I believe was the first one. That's right, the first one. So I select the first one and hit OK. So that will be my invoice for my prepayment, right? So let's say I'm getting paid on the 15th. And this doesn't contain any items, but the payment in this case is linked to the sales order, which is what everybody wants, is you want that sales order to be the central of all your transactions. And you want that job to also have the sales order number. That way just makes it extremely easy for you to understand how you're doing. So you'll invoice this, and let's say we're gonna receive the payment. So we'll go to customers, receive payment. Wow, that cough drop worked really well. Thank you. That worked magic, actually. All right. We'll see. I have another one, so we'll see for how long the cough drop will last. Okay.
Oh, I'm sorry.
Is it?
Right.
No, I said I have another one, so we'll see. Okay.
If I have any
Okay, so I got the job, and I'm gonna go ahead and select the payment here, 886.50. So I got my prepayment in. Okay, then it's now, let's say the 22nd. It's time for me to fulfill. So I'm gonna go to the sales order. So I go to customers, create sales orders. You know what the shortcut is for opening sales orders? Alt-UO. Alt-UO will open a sales order. Keyboard shortcut, Alt-UO. Alt-UO. Why UO? I don't know. That's what it is. So Alt-UO will open up the sales order. Then we'll do a find. We'll type in the sales order number, 8805, I believe. Open that up. Now you will notice that one of the items have been invoiced, which is also very helpful for your customers when they're trying to figure out, wait, have we invoiced the sales order? And typically, when you have that line item that was designed for you to invoice that prepayment, yes, it has. So that lets you know that. Okay. Then I'm gonna list fulfill now. So I'm gonna click on create invoice, and in this case, I'll just do all, and hit OK, and it will know. I'm gonna hit OK, and it will know to not invoice any quantities on the one that has already been invoiced, which is the prepayment. Okay. I don't know why there's a $20 difference here. Why would there be a $20 difference here? Hold on. There was? Wait, hang on a second. No, because I already invoiced the prepayment. Oh, okay, yeah, yes, okay. Sorry, I guess I was drunk. Yes. It's good stuff, right. I'll go back and fix that. Right, that's all right, 886, right. I transposed it. Right, so that will come in, and it will automatically zero out, because it's already been applied. Has anybody ever done this before? You done this before? I mean, this is
a bunch of,
this is big money consulting, right? Like not a lot of consultants actually do this. Like something as simple and elegant as 2 line items, 1 negative, 1 positive, does the entire workflow beautifully. And so this is where the money's worth in the inventory consulting enterprise world. Somebody had a comment? Yeah, so if you have like a scheduled payment, yeah. That was I think I celebrated too early, I guess. Yeah, so for construction clients, for example, which I have quite a bit with these, what we'll do is we'll create the entire schedule. Like we'll do phase 1, phase 2, phase 3, phase 4, whatever happens to be, and then at the end we'll do the complete job payment applied, and then we'll just invoice the phases. And then once the job is completed, because we're doing completed contract method, whatever happens to be, then I invoice the whole thing, and then it just zeroes out.
And I would say for those, that's really a good idea, because you forget where have I billed for that, have I not billed for that, and it's a really easy thing to go back and take a look and see if you have.
Right.
The more payments there are, the better that is.
Right, and it becomes when it becomes really a big advantage is when you run a report of open sales orders by item. Let's do it. Why talk about it? So let's do a detailed report, and let's go back to this report again. So we go to filter, and we go to what are the filters for these? The same report I did. What are the filters? Posting status, right? So posting status would be non-posting. Next one. Transaction type, that would be sales order. Next one. Page status. Page status will be open. And really that's it, right? And let's do detail level. Detail all except summary. Okay, and then we'll go back to, so let's open up, I'm gonna open up a sales order right now with multiple line items. I'm gonna limit this to October. So I'll do October. Okay, so we have nothing in there. So I'm gonna go into customers, sales orders. I'm gonna find the same one, 8088, 8085, what was it? 85. 805. This very dyslexic today. Okay, and let's say this one is not going to be a single payment. What I'll do is, and you know the shortcut for inserting a line, right? What is it? Control insert. Oh, I was assuming it's supposed to be working, but Control insert. Okay. Why would you not work? Let's do it. Not sure, but close the invoice. Where's my sales order? Okay, so Alt UO gives me a sales order. Control F opens up the search screen. 8805. Then I'm going to insert a line here, which is supposed to be Control Insert. For some reason it didn't work. So insert line. So I'm going to do upfront deposit. I'm going to split this into 3. So let's call this one Payment 1. Payment 1, and this would be, let's say, $300. And then we'll do Payment 2. So Payment 2. Payment 2 would be, let's say, $400. And then I'm going to right click here and click Copy Line. Come in the bottom, right click, Paste Line. Perfect. And I'll do Payment 3. Which in this case would be $166.50, I believe. That should be the math.
Check box.
Yeah, well, I'll delete the invoice, and then upfront deposit would be the negative, which would be the payment applied, and that was negative 866.50. Perfect. So, real quick, let's make sure I didn't lose anyone. Sorry, that was a lot of maneuvering. So, we created a sales order that has a scheduled number of payments. Payment 1, Payment 2, Payment 3. All prepayments, right? And then when we deliver, it could be during Payment 2, Payment 3, or it could be in the future. So, we're pre-scheduling all of our payments by setting them up as negative items into whatever balance sheet liability account in whatever the dollar amounts are. Okay, and then we're zeroing that out for the last payment. Let me hit save. Now I'm going to go and delete the invoice. You know how I did that, right? You know, so if you're in a sales order and you want to go to the invoice that's linked to the sales order, you hit Control H and it pulls up this screen. And then you double click, and then I'm just going to delete this one. Okay. Okay, so we're back at just this sales order. So we had a report that we had created. Let me make sure I hit save here. So we go to reports, window reports. I hit refresh. The date. Yes. I just noticed that. Because I made it October. So let me take this back to October. 10/01/22. Tab. Save. Back to the report. Perfect. Okay, so that contains all the items that are in there. Okay, so what we want to build is a report of all my open sales orders that have multiple payment schedules, and we need to know which of these payment schedules have been invoiced. That's actually a very typical scenario. So in this particular case, what we would do is we would probably filter and only show those particular items, right? So we're going to item, and then we would pick let's do, that one's called upfront deposit, I think. Yep, there it is. So that will show you all the upfront deposits that have been, that are in the sales order, and these are all the open ones. So now, I can total these by customer, and because I picked the sales order number as my job, now I actually have a report that shows me my open sales order by sales order and how much of it has not been invoiced if it's a prepayment type of scenario. So that's kind of pretty advanced. We kind of went on the tangent here, but I wanted to cover something that was just like a sort of an advanced topic. So then as I invoice these, so I'm going to invoice 1. So I'll do create invoice, and I'll go selected items, and I'll click select all, and I'll just pick, let's say, the first one, and I hit OK. So I'm going to invoice just my $300 payment, and I'm going to hit save and close, and I'm going to assume that I got paid. We'll just do that. So then only the second one and the third one show up. Okay. Now, if there was a different scenario where my customer would say, and I had this situation before, where they say they don't want to see this one. Then what I would do is just pick two different items. So I would have upfront deposit and I'll have applied deposit. But it all hits the same account. That way you can play with it with the filters. Was that helpful? So all the little weird tricks of the trade that you learn when you do this stuff. Okay. So back to inventory workflow. Okay. So we got the sales orders. There was a question somewhere, right? Okay. Yeah. So how do you open a sales order? Shortcut? Alt? You owe, right? Because you owe me. Right. So the next thing is, let me find the 8805 here. The next thing is, okay, let's assume then I don't have the stuff in stock. So what I would do here naturally, one of the things I would do here naturally is to create the purchase order straight from the sales order. Now remember, you can't do that with QuickBooks Pro. QuickBooks Pro doesn't have sales orders. So you have to have an Enterprise or Premier. So we're going to click on Create Purchase Order straight from here. And this is the tricky part. You can't just include the payments on the purchase orders. That's the only part that needs a little bit of maintenance from the user. So create purchase order for all allowed items, hit OK, and it chooses them here. Now I'll show you one thing. This is a kind of a cool trick. We go back for a second. When I click on create purchase order and I click selected items and I hit OK, notice that this screen has preferred vendor. Now, if you have not so smart clients like I do, what I do is on the upfront deposit, I put a preferred vendor that says do not use for POs. I'll create a vendor called don't use for POs, and then when they see it, they're like, oh, okay, sure, I'm not supposed to use it for the POs, and then they just stop there. Does that make sense? So in the item itself, you have to put a preferred vendor called do not use on POs. Again, it's all QuickBooks has blessed us with really a system that, even though it's limited, it has a lot of weird, funky workarounds that we can do. Right, so we'll hit OK. Now, one of the major issues that we have with a lot of our clients is they want to link POs to sales orders. Right, and you can't. You can't link a vendor transaction with an income transaction at any point in time. The closest thing to that would be enabling the customer job field in the PO itself and having the job number in there. So what do I mean by that? Here where it says customize data layout and columns, there is a column that says customer. See that? So you enable customer and then hit OK, and then you should have the customer job here, which in this case, I wonder if that's a custom field. Hold on a second. No, it's this one, customer job. Sorry. This was a custom field that was in there called customer job. Okay? So you see the customer job there, and then what's the job number? The sales order. So it's a workaround, right? Because you can't, in inventory businesses, hardly we ever use jobs.
It's the same premise as point sale.
Huh? Yeah. Right. So typically we don't use jobs in inventory business, although it could happen, it certainly can. But just create every order, make it a new job, and then just make the sales order. Now, if you have a client that does 1,000 sales orders a day, I would probably say, I'm not sure if I want to create a new job for each one, because I'm going to make the data, it's going to be a database hell, right? Or unless the client is willing. I mean, this may be something they need, because I get this issue all the time. They're like, I don't know what sales order this belongs to. Okay, and the closest way to automate it would be this way. Yeah, this customer column, here there says custom data layout. Under columns, there's a little checkbox that says customer job. Okay, and because a workaround, I created the job name as the sales order number. That's how I know. But there's no way, QuickBooks doesn't have any way to link a vendor transaction with a sales transaction. It can do it through a report, but not through the transaction itself. The other workaround would be, just looking at the memo. Right? It's in the memo. It's in the memo. The problem is that if I'm trying then to pull it from a report or something like that, then I won't be able to see it. Right? If I pull up open PO report or something, want to know what the job is, I can do it this way, but I can't do it with the memo. Okay?
Yeah, typically what I'll do is I'll just put a custom field in my customer table called sales order number.
Yep.
Or purchase order,
Yes?
and then have it follow across throughout the process.
Right. The problem is, wait, hold on. The problem is,
And you also have to do the same custom field in your vendor table.
correct, and you have to retype it when you create a PO, because you can't take a custom field on the sales side and copy it over to the PO side. It doesn't do it.
It might, yeah, it depends.
Right, you may have to just copy and paste it from the memo. Right, so the memo is always gonna be there because you created a PO from the sales order. That's the only reason why it's there, because otherwise they wouldn't know. But I think that customer job is just much better, and it's natural. It makes sense. Okay, and then I'll pick the vendor, and then I'll do save and close. Okay, so that would be the standard process of getting the product ordered. Now there's also a report, which would be my open purchase order report, which you would follow the same exact process with the other report that I created, but the default one here is other purchases, and you got the open purchase orders by item. You have the open purchase orders, just the summaries. But one thing that's pretty cool, there is a open purchase orders by job, which in this case would technically give you open purchase orders by sales order. Right, so that's why we set the premise at the beginning that you want to create the sales order number as the job. That way you get all that information across. And this is the only workaround to get that sort of information. Okay, any questions?
How many uses a cutoff for quantity of sales orders per day before you think that would really start bogging down the database?
Yeah, so I go by targets. I mean, my thing is targets. So when you hit Control-1 on the keyboard, okay, if I'm working with a Premier client, Pro Premier client, I use about 300,000 targets as my limit. So once I start getting to 300, that Premier file is just going to blow up. For the enterprise, I do about 1.2 million targets. So targets are number of line items per transaction, including the source, including sales tax. So let's go back to you. Ask your question again, just for a second. Ask the question again. What is the total number of transactions where I would think that the QuickBooks file will blow up? I would say I go by targets.
Right.
Because I have
You'd have to look at the sales orders, and it would have to depend on, for instance,
number of items.
line items.
Number of items. Yeah, it's not number of items. So for example, if I have a client that the average purchase order has 7 lines, which means the average sales order will also have 7 lines. And then I also have my invoice, which is 7 lines.
Yeah.
Right, that's 21 lines, plus the header of each, so that's 24 lines, plus the sales tax on the invoice, that's 25 lines. And then I have multiplied times how many they have, and that's how I'll know how quickly they'll get to 1.2 million targets. And beyond 1.2 million, that's just like you have to do a condensed and that sort of thing, right?
Can you say the numbers again for enterprise and Premier?
Yeah, they're my numbers. These are not official. Yeah, so for Premier, it's about 300,000. And for enterprise, I used to say 1 million, but now I say really 1.2, 1.3. So number of targets, which would be line items per transaction. So if you don't count the bank and the checks and that stuff, just focus on PO, sales orders, and invoice, which are usually the biggest things. Number of line items, count them all, and then figure out what that math would look like. Okay, so then we have the magical next process, which is receiving let me go to the home page, which is receiving the inventory, and then we get this really dumb thing, and I do this in every class I teach QuickBooks in, and it's always funny to everybody, and it may not be funny today. Okay, we'll see. Let's try that. Okay. So the next thing is we click on Receive Inventory, and it gives you 2 choices: with bill or without bill. So if the inventory guy is named Bill and you're with him, you select this one. If not, just that's my one joke. Okay. Anyway, so from an inventory perspective and from an accounting perspective, with a bill and without a bill is the exact same thing in every possible shape or form. So whether you do with bill or without bill, all the accounting effects are the exact same. The only difference is when you receive without bill, that bill, which is a bill, by the way, that's a bill, doesn't show up in your pay bills window. That's the only difference. An item receipt is a bill that doesn't show up in the pay bills window. Okay, that's under your regular inventory process without the enhanced receiving, which we're going to get to in a little bit. Okay, so I want to just kind of compare these, and then I want to get into it, enhanced receiving right after. Which, by the way, I don't recommend you ever do, but I'm going to show you how that works anyway. Okay, so I'm going to select the vendor, which in this case I think it was Anderson. Hit yes. Let me see, I'll go back. I don't remember the name of the vendor. So the PO that we just created.
It has the sales order number in the memo.
It was this one. It was Baxter. That's what it was. Okay, so Baxter. So I'm going to go to receive without a bill, and then I'll pick Baxter. Hit yes. Select the PO. Now, I'm scanning items. That little check mark, which we'll cover, that's if you don't want, when you receive that, if you don't want all the quantities to go up automatically, if you want the quantities to be just zero, and then you want the scanner to do that. Actually, let's just do it right now, because actually it's a pretty simple process. So let's go back to the PO here. So open up the PO. So this first line item, Iron Spring, I'm going to create a barcode for this one. So all I have to do is, once I have barcodes enabled, and I'll do this again in the afternoon with more detail. I'll set up barcodes from zero. So this item will be, let's say, this box. So I go into barcode, and I use always my wired scanner. Okay, you can't use any wireless scanners with these. I mean, you can use a Bluetooth, but not the wireless solution that Intuit just gave us. So I'm going to go in there and just add the barcode in there. So the item itself now has the barcode as part of its configuration. And then for my other item, which, by the way, you know how to get quickly to the item list from here? You don't? No one? Not one soul? This will be worth the class. Just this thing. Control F. Right. So if you are on any transaction like an invoice or a PO, and you have the item selected, you hit Control L, and it takes you straight to the item list, and it highlights it. And then you hit Control E, and it takes you straight into the edit screen. Okay, because sometimes we spend so much time looking up for those items. So let's say the other one, I got this other thingamajiggy here. So I'll scan these. Perfect. So now I got my two items that I want to scan when I receive them. Okay, so I'm going to hit OK. So I just, in this case, I didn't do anything on the sales order itself. I did this on the item itself. Okay, so if I go to receive inventory items with bill or without bill, doesn't matter. Let me do without bill, because bill is off today. And I pick Baxter, and I hit yes. If I don't click on scanning items, and I select the PO and I hit OK, all the quantities automatically are assumed that you're receiving the whole thing. All right, that's basically the difference in workflow. If I clear this and do it again, Baxter, and I hit yes, and I click I'm scanning the items, and I hit OK, they both come in, right here. They both come in, but they don't fill. Actually, I don't know why they didn't come in, but they don't fill. So at this point, I go, yeah, let me try this again. Baxter. I did select I'm scanning them, right? Select it, I'm scanning them, okay. Oh, okay. Yeah, so you come in, and then right now the quantities are zero. So at this point, the person has to do this. Right? Right, and then bring them all in. Okay, this is the Honeywell scanner, the same one that they sell, that QuickBooks recommends for the POS system. Actually, I took this from my POS system that I have in my office. So it's really expensive for what it is, because they got some really cheap knockoffs for like 20 bucks. That was like $120.
Honeywell's?
Yeah, the Honeywell is the most expensive one. But, yeah. Well, not the most expensive, but it's really expensive. I mean, for just a wired one. And they do have some, in Amazon, they have all sorts of barcode scanners, like off-brand for like 20 bucks, 15 bucks. I would just order a few and see which one works, return the ones that don't.
Right.
But this was part of my POS system demo, so that one just always works. Okay, so in this case, I scanned all the ones that were here. In this particular case, I scanned less than what I had in stock because one of them, actually for both of them, I sort of short shipped myself, which is fine. It's okay, totally normal. And then I click on save and close, and that's it. And I received it without a bill. Now, receiving without a bill brings it into inventory, brings it into accounts payable, but it doesn't put it on my pay bills window. It's the only difference. The what?
Item receipts do not appear on pay bills.
Yeah, they don't appear on pay bills, but they are a bill. They are a payable. It's kind of a strange thing.
So then you have to go back and modify that in some way.
Right, so you would have to go back into it, right? Let's see, let me do find. It was Baxter, right? So do find.
That's without.
Right, we haven't gotten into enhance yet. Enhance is a whole other animal. So yeah, so this is actually a bill. If I hit Control Y on my keyboard, which is my journal, you can see that the account that is affecting is what? Accounts payable. So it is a bill. For all sense and purposes, this is a bill. It's just not showing in the pay bills window. Oh, you just click on this little check mark and not make it an item receipt anymore, just make it a bill. So this check mark that you see here, right there, okay, the workflow for this is supposed to be for accounting people that are getting acknowledgement that they got the product, but they don't want to confirm that the final bill from the vendor is the exact same dollar amount as the PO. And there's always a case with shipping wasn't added, or there's always a case where the dollar amount of the PO just doesn't match because the item just changes in value. So all the item receipt really does in terms of helpfulness is to separate the items the bills that someone has manually checked versus the ones that someone hasn't manually checked. Right? And usually you would have, in an item receipt, you would have an attached file of maybe the bill of lading or some sort of shipping document, the pick list, something like that. And then if people are using the attach feature fully, hopefully when they create the bill, they attach the actual final bill from the vendor. Yes, great question. For all purposes, an item receipt is a bill. You can't pay it. Can't pay it because it's not in the pay bills window. Yeah, if you say it like that, when you go enter the bill. So if you actually go and enter a bill separate from the item receipt, yes, you can duplicate, but you shouldn't. You should go back to the item receipt and just convert it. Yeah. So what Karen's saying here is go to this report, go to reports, go to vendors and payables, and go to unpaid bills detail, and you're going to see all unpaid bills and also item receipts. And if you wanted to give your client a really good resource, you would just create an unpaid item receipts report by just filtering and just choosing item receipts only.
And that way they know that they haven't been billed from the vendor.
Right. Well, maybe they got billed, but they haven't done the exercise of actually checking and adding it. You can duplicate it, yes. No, not if you don't use the workflow of the PO, right? Where you want to go receive and select the PO. If you just go straight to the bills and skip the PO process, there's no warning. The only warning is there's open POs. But in this case, if you have item receipts and no open POs and you go straight to the bill, then yeah, there's no warning. Right, which is what the client will do. That's why you want to create an open item receipts report and have that. And this is a critical problem. Make sure that's the first report that pops up when they first open QuickBooks. You know how to make QuickBooks show up one report when you first open QuickBooks? Rookies. Just kidding.
I hope
I'm sure.
video recording works.
Right. All right, let me show you. So if there was one critical report you want the client to see the first time they open QuickBooks, right? Do we have any clients that we want them to look at one report before you do anything? Look at this one report, whatever it happens to be, right? You clear the screen, You open the report, let's say, for example, this is not to do with inventory, by the way, but it's more, you open up the one report you want people to see, let's say it happens to be this one, and then you go to the edit menu, preferences, you click on desktop view, my preferences, take out the home screen, click save current desktop, hit OK, and this is the first thing that will show up first time they open QuickBooks. Oh yeah, you go to edit, preferences, desktop view, and you click on uncheck home page, right? No home page, right? And then do save current desktop and hit OK, because they'll get distracted with the home page. But if you want your client to see this, the first thing you want them to see, then do that. Okay? So I was on the item receipt. So I was on the item receipt without the bill. Now here where it says enter bills against inventory, if you click on that and you hit Baxter, right, it will actually tell you the item receipts are pending to be converted into a bill, right? But that's not on the bill window. That's under, create bills against, enter bills against inventory. And then you hit OK. And it'll actually convert it for you. So I don't know why it's thinking at the moment. It should have just been one quick thing, but I didn't click it. That's weird. Okay, let me go homepage. Enter bills against inventory. Baxter. Selected. Hit OK. Okay, so by default, it's just going to turn that into a bill, and it's going to use the same date as a really key component here, same date as the original item receipt. Now, let me go back to the workflow for a second. Let me not save this. There's one little check mark there that says use item receipt date for bill date. So if you do that, all it does is just maintain the item date or choose today's date. This is based on your default new transaction date preferences. So it's really up to you what you want to do. But remember that even if you have a close period, for example, let's say you received this in November, right, and you close November, and now you're entering the bill in December. If you're going to date this November, you're going to change financial statements, assuming that they're going to have different numbers. If you want to date it in December, you're also going to change your November statements because you're moving that payable from a different month.
And you may have
and you may have multiple things. You may have negative inventory. You will have a recalculation of your average cost, and you will possibly have a different gross margin number for that month. I would, if your question is you're saying don't change the date, I would say that once you enter a bill, QuickBooks will calculate average cost based on that date. If I go, item receipt. If I enter a bill after, in whichever date it is, the date that actually the bill got received, if I change the transaction date, the cost of goods sold may be recalculated if that bill was changing my layers in my average cost. Okay, so I would say yes, please don't change the date. Now, but what's the problem that every client has? Is that the terms, correct. So what's the solution? Just manually change the due date. So that's a common issue that we have, is that the vendor gives them 30 days from the day they ship. But the customer wants to enter the bill the day they get it. But if they put the bill the day they get it, and then they put 30 days, they may pay 2, 3, 4 days late. So you just have to teach your client to manually put the bill date to the 30 days or whatever it happens to be based on the original bill date. If you want to include the original bill date in there, it's going to have to be a memo, right? It's going to have to be, if they want that, put their original bill date, whatever it happens to be, right? 11/30/2022. It has to be a memo, just because you cannot change the date of that bill to match your vendor's bill date or invoice date, because you're going to change your cost of goods sold, you're going to change your financial statements. It's just going to be a mess. Any questions on that? Okay. Now let's put the reference number here. We'll put a reference number, and then we'll hit save. Now, another big question, and I'm going to do a short demo of this, and on a pre-recorded video, I have a 20-minute demo of this where I go really long and in-depth, which is landed cost. Okay, landed cost is a big problem in QuickBooks. Because let's say, for example, that these are very low cost items, but they're very expensive to ship. This is a reality. You can have a low cost item that's expensive to ship. And then the difference between the item and the ship is actually the ship cost is so significant that it should affect your item cost. So for example, let's say I have shipping here of $100, and I don't know if I have an item here for freight. I do, okay. So I have an item for freight. So I have a freight of $100. So now my bill goes up to $308. But what's the accounting problem with here? What's our accounting issue? That freight goes straight into my cost of goods sold on the date of that bill. So when I go into my inventory evaluation report, those items are worth whatever, right? 50 cents a pop and $10 a pop instead of some other number. Okay, so there's a massive workaround. And when I say massive, it's massive. Like out of 100 clients I've tried to implement this with, maybe like 15 have done it successfully. The rest just say, screw this. Okay, it's a massive workaround. It takes a lot of patience and pay attention to detail, which is how do I get that $100 to be part of the inventory cost? Does anybody know or want to guess? Yes, Karen.
A freight clearing account.
Yeah.
And post the freight bill to freight clearing, and then you check that bill, allocate your ending maintenance.
Right. Right. So I'll show you.
But
Yes.
Q2Q
Has a tool. Yeah. Yeah. So let me stop for a second, okay? Because this class is covering a lot of like little technical things. So in this site, hectorgarcia.com/SNH, just write that down. There's no buy now button or no credit card form. I'm not selling you anything. I don't sell anything to my colleagues. In that site, I posted all of the resources related to this class. Okay, this is a. If I'm allowed to, yes. If I'm allowed to record like today's class, yeah, I'll put it there. So I have a couple of things, and one of them is landed cost, right here, landed cost. I'm not gonna play the video for you, just showing you. So in this one, I go in detail how I do this with spreadsheets and everything. I do a whole process. But I'm gonna show you how landed cost works. I'm gonna do the demo real quick, but there's a video because there's a lot of moving parts in landed cost. So the premise is, do we want the $100 to go to cost of goods sold, or do we want the $100 to be spread across my product price? Now we have another challenge. How do I split this? Like, what's the even of the $100? Do I put $50 on one product and $50 on the second product? Well, that's an option.
Based on weight.
Huh? Based on weight, but let's say I don't have the weight. It should be based on weight, absolutely. I agree with you 100%.
But you could put the weight.
Percentage of the cost of that?
You could
Yeah.
put the weight in the custom field on that. If you're doing this in enterprise, you've got.
Yep, great idea, right? So what she's saying is to take it one step further. The challenge may be that I don't know if I can see it in here. Yes, I can. Okay. So what she's saying, actually, I like that idea quite a bit. Let me tell you what she's saying. And that's assuming you are going to go to that level where you're going to do it by weight. Yeah, in some cases, right. So if you have a custom field here, and let's say, for example, this one that's called style, I'm going to change this to weight. Okay.
You have to customize the field so that it will standardize.
Right. Right. But in this case, I'm just creating a custom field called weight, and I had included that in the PO. And then once I'm in the bill, I can actually customize. This is enterprise only, by the way, folks. Enterprise only. You can actually customize the columns in a bill, something a lot of people don't know. And then you insert the weight in there, and then the weight becomes now a free box, and that will transfer over from the PO. So if you had the weight in there, right, the weight of the whole package or the individual unit, you had to figure out what that is. And if this was 2080, for example, then this would be really simple, right? Because you know by weight. So you're gonna have to decide how you're gonna do this. In the video, I explain how I do it based on weight, how I do it based on units, and based on price. So there's a couple of ways we can do it. We can say $8 versus $200, let's just do it proportional, right? So 4% of the $100 goes to one, about, I don't know if that's the exact number, and the other 96% go to the second line item. Or I can split it based on the lines, 50-50, which wouldn't look very right about now. Or I can do it based on quantity, right? I can take my 36 units 16 and 20 and divide that by 100 and get a number. So based on, let's say we don't have the weight. If we don't have the weight, how would you do it? Let's take a vote. I don't have the weight. How would I do it? Proportionate to the total dollar value. That's the easiest. Yeah, absolutely. That's the easiest. Total dollar value proportionate. So I would run a calculator real quick. You probably do this in a spreadsheet. On the video, I show you how to do it, where you take that transaction, you create a journal, and you export it to Excel, and you do it in Excel. Let me not cover that because I get off time here, but let's just simplify it. So we have 8 divided by 208. That gives me 0.0384615, right? So I multiply that times my total freight, which in this case is 100. Okay, easy math. So that's 3.85, and I have to add $3.85 per unit. Does that make sense? Right? So my unit cost right now is 50 cents, so I have to add 3.84. So I add plus 50 cents.
We need some AI to do this for us.
Well, there's an app by Q2Q.us called Freight Allocator that does this in one shot. It's a $140 app. But I have some clients that prefer to pay me $500 to explain them how to do this instead of paying $150 for the app. Let me just, what can I do? You know, I mean, look, this is fun to teach your client this, by the way, because you're getting into Excel, calculation. Not fun?
No, people never understand it.
Yeah, if your client doesn't understand it, it's not fun. But if your client does understand it, it's tons of fun because you're getting deep into their operations. And there's clients that go, holy shoot, to not to say what they actually say. This cost me 4.34?
Lost money on that.
Yes, absolutely.
Yeah, I would tell you, it's also like, you know, I used to know how to add and multiply, divide, and cosine and tangent in my head, not in mind.
Right. Right.
This is really important.
Right, but I think it's important for people to know that that item is not 50 cents, it's $4.34, right? So now you have to come in here and put $4.35, which would be a huge now realization to the customer. Always this will actually be a never update unit cost, right? That little check mark is so it doesn't change it on the item price, so it doesn't post that price in the PO. And that's really important. The PO is still 50 cents. And then we hit OK. And then we have to. Yes. I'm showing you step. Yes, I'll take the freight line in the next step. Okay. All right. Right. Correct. There's two things. One is what if the freight is inside the transaction, which is what I'm showing you now, and there's also what if the freight is on a separate transaction. So right now I'm showing you what if it's inside the transaction, which is what we're seeing now. Okay? Okay? Huh? Oh. For how long? Test. Oh. No, this is not off. This is without a battery. Battery dead.
What kind of battery?
Where's the Woodard people?
What kind of battery?
Double A.
I may have one.
Yeah, someone. I'll just try to scream with my voice.
Here has
Oh, somebody's coming for Woodard with it.
no. I got it.
It's two of them. Yeah. Okay, that's fine. Okay, sorry. Okay, so we did the first one, which is the $4 or something that we added. And then the difference would be, so let's just go back for a second. The difference would be, it would be 200 divided by 208, which is 0.9615, times 100, and that 100 is because I did $100, made it easy. It's never like that. It's always 88.75. This is why you need a spreadsheet. The video explains it with a spreadsheet. So now I have to add $96.15 to 20 units. All right? To the cost, right. So I have to add $96 to the entire cost, in this case, Yeah, so the first one made a big mistake. So I'm going to add, so this would be $96 to the 200. So I'm going to do 200 times, right, plus 96. What was the cents? 15. Yeah. Okay. I made a mistake on the first one. Sorry about that. Yeah. So the first one was, let's do the first one again, was 8 divided by 208, right, plus the previous number, which was, I think it was $8, right? So that plus $8, so it's 8.38. That's not right.
1185.
Yeah, hold on. Give me a second. Okay. 8 divided by 208. Yeah. 8 divided by 208. Oh. 8 divided by 208 times, or plus what? No, times 100. Times 100 plus 8. Correct. That's 11.64, right? 11.85. Right? Then I hit tab, and I'll recalculate the cost. So sorry, I added it to the unit cost by mistake. So I did it to the total because we're doing it based on total. Right? So I recalculate the units. I apologize. Still, being from 50 cents to 75 cents, it's a big jump, right? It's a 50% increase in cost. Right? So now, that's all assuming that the cost was built into the PO, so that at this point, then I wouldn't need this line. Okay? And that's how I got the 308. That's how I spread the cost across the unit. So that's landed cost. And that was 2 items, right? So it gets more complicated with more.
Next time you do a purchase order for that vendor, does it fall and say this?
No, because we said no.
Yeah, so good question. So when you change the cost of the item, it asks you, update the cost, you say no. Yeah, and then you can also default it so it doesn't ask you ever again. Okay, so we'll hit save. Now, what would happen if those $100 were not part of the PO? They were in some other bill to FedEx. Okay, and this would be a $208 bill from the vendor. Well, the process is identical. You have a question? Oh, the process is identical. That you get the 308 on the item. The difference is when you go to expenses, you will have freight cost, and you will do negative 100. Right? Because I want this 2 to net out to 208. Because that was the original PO was 208, the bill is 208. But I had to increase the individual item price, and then now I'm punishing my freight account by $100. And are some of you worried about that? Huh? Right, and right. As of now, I'm worried. Yes. But then when my FedEx bill comes for $100, right? So I go to save a new, and then my FedEx bill comes separate. It will be a normal bill.
You don't know the money amount until you get the FedEx bill.
Right. Well, we would have to. I use FedEx as a bad example. Let me use a freight carrier that gives you the price up front, not the one that gives you that you have an account that sends you a bill at the end of the month. Okay. Well, any freight carrier which you know the cost up front. In the case of FedEx, that gives you a bill if you have your own account. In this case, that gives you a bill afterwards. And you wanted to do this, you would actually have to go back a month ago, 2 weeks ago, 3 weeks ago, and do this, assuming you wanted to the landed cost.
Assuming you wanted to hire another person.
Yeah. Well, let me tell you something. When you do inventory consulting, giving somebody the accurate gross margins is the only important thing you can do. You can consult on everything, but you can't give them accurate gross margins, your work is useless. Inaccurate gross margins in inventory business, it's nothing. It's nothing. Yeah, they'll fail, absolutely. Because why? Because the wrong gross margins causes people to price the product wrong, which also causes to pay the wrong commission amount, and the entire business model shut. So yes, if you have a client that has $1 million in gross margin, and they don't do any of this stuff, they're likely understating their item cost by 10 or 20%. Well, there's 10% is 100,000. You can hire 4 people with that money. Maybe 3. 2. Half of me. Right? So then when you get the regular bill for FedEx, it's a regular bill for FedEx or whatever third-party carrier, shipping carrier it is, and then you're going to have a negative in freight, and then you're going to have a positive in freight. And I don't use clearing account for this. I just use the same shipping account just in case they miss something in the process. It's all hitting the P&L where, I don't want them to hit some balance sheet account. Because there are some folks that tell me, no, there should be a freight clearing balance sheet account. Come on. I can't trust my clients with a balance sheet account. Right, so I prefer to just post into P&L and, and the stuff is being posted in real time. So I'll do save and close. So that's landed cost. Okay, so this is the advanced part of the class really on that workflow. Okay, then you just pay the bill as normal, and then if you want to fulfill the sales order, let me go back into the sales order, find 8805. We said we were going to invoice these in prepayments, right? So we invoice the first prepayment, then we're going to invoice the second one, selected items, select all, only do the second one, hit OK. I'm invoicing my second payment because we said we're doing this in a sort of complex transaction. Save and close. Let's assume they paid us at some other time. Then we go again to the sales order. What's the shortcut? Alt UO. Alt UO. Alt UO. And then 8805. Create invoice. Also selected items. Then the last payment, select all. The last payment, hit OK. There's my third installment that I'm invoicing my client. Also assuming that I'm getting paid for it. And then finally, let's say it's finally time to ship it. This is the tricky part now. Not tricky, but just the ones that you have to pay attention to. When you invoice the last piece, you will do all, and you should have, in theory, all the items being invoiced and a bunch of zeros on the payments, and then the last payment will zero itself out. Okay? Because remember, they already paid us in phases. They prepaid us in phases. We're just creating the invoice now because we're actually releasing the product. Okay? So that's the only... Wait, if anybody's confused by this, and you want to see me after class, I can clarify a little bit, because I did add sort of a wrench in there, which is prepayments. Prepayments are not simple, but this is a workaround for prepayments. Okay? If there were no prepayments, then none of that stuff would have happened. It just would have been an invoice, and that's it. So we'll hit save and close. All right, so any questions on that? Okay, what time is it? 3:03. We started at 1:30. Oh, 3:10. Okay, all right. So let me go back into the spreadsheet here, the PowerPoint, I mean. Let me just make sure I didn't miss anything critical. Okay, so we did the entire workflow with sales orders. Okay, so we can cover anything we missed. We can cover in the second half. Right now I have 7 minutes, and I'm gonna pick between inventory assemblies and bill of materials, and we did landed cost. Actually, that's it. Just assembly is the only thing from this part. Okay, so let's go to manufacturing. Okay, you may want to stretch out for this one. Okay. So the first thing with manufacturing I would tell you is, before you try to master assemblies and manufacturing, you want to master units of measure. Units of measure are the single, like, if you don't get units of measure or your client can't get units of measure, don't do it. Okay, units of measure are the single culprit of all the problems that I have with manufacturing clients. It's not understanding that kilograms and grams are different, and pounds and pints and ounces, all that stuff, you need to master that. So QuickBooks has a way of you doing multiple units of measure or single units of measure. In manufacturing, 99% of my clients have been multiple units of measure. Okay, so let's do an example here. Let's go to the item list. Okay, and let's manufacture something. Somebody throw something out there for me.
Here.
Beer. Awesome. Okay. So we'll start with the first item. So I'm going to start with the most basic item in beer, which will be barley. Hops. Hops is more important than barley. You like IPAs? Okay. So let's do hops. Okay. Now, this is where stuff gets really tricky. Okay. Whenever you are dealing with inventory raw materials that you're not supposed to be selling, you are creating them in QuickBooks as an inventory part. So your customers will always be tempted to sell them, correct? So you always, when you create raw materials, you always put on the sales information, do not sell.
No, I did that once, but in this case, they sold the hops.
Yeah, right. But they are in the hop selling business, you're saying?
They are
Oh,
beer manufacturing business, but
they're just dumb.
they are such a connected thing.
Right.
Some guy runs out of hops.
Right, right. Yeah, well, I would say, for the most case, I would put do not sell, but on the sales information, also put a little bit of the description, whatever happens to be hops in there, just because in some screens in QuickBooks, it says do not sell, and it's just very confusing. So you kind of have to deal with both. Then the cost of goods sold account, in this case, doesn't really matter, because this is never going to be on an invoice. But either way, what I'll do is I'll just pick the same account for all of them in this case. So the account for this should be raw materials.
And that's what it costs.
Right. So we do raw materials, and raw materials should always be an other current asset. And I'll use the same account for all of them. And most importantly, for my asset account. Matter of fact, these two don't matter, because this only shows up right when you invoice it, and this only shows up when you invoice it. This shows up when you purchase it. Okay?
That was the gotcha.
Huh?
So that was the gotcha.
Yeah, that's the gotcha. Right, it's a good one. Right. Then we have the multiple unit to measure. Now, what could happen? I can buy hops in this like 800-pound bags, right? And then maybe after I bring them in, I cut them up into other types of bags. Okay, or maybe when I consume them, I don't consume them by the bag, I consume them by the gram. Okay, so let's do that. So I'm going to create a new unit of measure, and we're going to do it based on weight. And let's say the base unit of measure, and the base unit of measure should always be the one that you use the most. And in this case, the one that I'm going to use on manufacturing will be it. So let's say that the ones that I use in this case is by the gram. I don't know if it's by the gram or not, but I don't know. What is it, Karen? You brought the idea up. It's your pounds? Okay. All right, we'll do pound. Okay. So we'll do pound, and then I'm going to create a related unit of measure based on how I purchase it in this case. So let's say I have a 860 pound bag. So I'm going to call this one 860 LBS. And then how many pounds? 860. Does that make sense? Okay, so my base unit of measure is pound. Why? Because when I go to the warehouse and I have half a bag or a third of a bag or a full bag, how I know is I put the bag in a big weight. That's my base unit of measure. I like to call base unit of measure of how I count it, not necessarily how I consume it. I'll take it back. Base unit of measure is how I count it. But let's say that I consume these by the ounce. When I actually produce them, I consume it by the ounce. How many ounces are on a pound? 16? What is it? 16? Right. So I'm going to create a related unit of measure. We'll call it OZ. And we'll call this one, in this case would be just OZ, I guess. I don't have to do anything else. Right. And then how many pounds are there in 1 ounce? 1/16. So I wish there was a calculator here. Oh, there is. Oh, there you go. I don't have to wish anything. My wishes came through. All right. So there's 0.0625 pounds in 1 ounce. Okay, and this is really important because then when I do my formula, okay, it's gonna, because the formulas are, actually I dealt with not a beer manufacturer, but I think it was like a chocolate maker. And I told him, in order for me to help you, I need the formulas. He's like, I can't give you the formula. I'm like, I can't help you. He's like, what do you think? I'm going to take this and do it at home? It's freaking people, man. Okay. And then I hit next. I hit yes. Okay, so when I purchase it in 860 pound bags. When I sell it, it doesn't matter because I never sell it. but I'll use my base unit measure. And shipping, by the way, everybody wonders what this is. That's when you have just do a pick list, a sales order pick list. So I'll just do it by the pound and then hit next. Now this is going to be very important when I actually start consuming this. Now, my customer tells me that I need to have 2 bags, at least 2 bags in stock at all time, 2 860-pound bags. So what is my minimum reorder point? X60 times 2, right? Because my base unit measure is pounds. See, if any of you are confused, think about how your customers will feel when you deal with this. Okay? So your minimum and your max always have to be different. Okay? They have to be different. So if I always need to have 2, what is my maximum reorder point? 3. Right? 3. Right? So my maximum will always be 3. So that would be 860 pounds times 3. So 3 860-pound bags. Quantity on hand, nothing, because we should follow the workflow. Let's say the cost of the bags is $930. What's my cost per pound? 930 divided by 860. Okay, so 1.814 per pound. In sales price, I just put here $1 million. That way, if they put it on an invoice, they're like shocking. Right, so even if they do not sell, it's not powerful enough. The $100 million price tag should be like, you know what, something's wrong here. Okay? Normally I just put 0, but that's just an idea. All right, so I'll hit OK. Okay. This freaking, give me a second. This custom fields. Okay, so I'll hit OK. There's my hops. Karen, the beer expert, what is my next component? Yeah. Just keep it to 3, by the way. I know there could be a million things. So I'm gonna right click on this one, right click and click on duplicate item. Okay, and it just adds all the components of the last item, just adds the word dupe in front of it. So I'll delete that and just replace that with what? Malt?
Napkins and crayons.
It's malt, right? Okay, so I can't use the same unit of measure. I have to create a different unit of measure because that one comes in grams. So I click on add new, weight. Okay, you weigh it by, you don't weigh it by the gram though. You weigh it by the pound probably.
Oh, it's great.
You weigh it by the gram as well?
The whole can, and it comes in a can of 200 grams.
A can of 200 grams. Okay, so we'll do gram. No, in this case, but when they count it by the can. Okay, so we'll do an other. So this is where it gets really tricky. So we'll do another. We'll call this one a 200 gram can. Right? So Karen's telling me that they buy 200 gram cans, and the formula per bottle of beer or whatever may be an eighth of that or something like that.
Actually, the whole can.
Right, but because they do the big batches. So a whole bunch of cans, not just one can. Right. All right. So we'll do it 200 G can. Okay. Okay, and then I hit next. Okay. Now the related unit of measure will be the gram itself. Okay, so this will be a gram. That would be kilo G. So how many grams are there in one can? 1 200ths. So 1 divided by 200. So 0.0005. Right? Following? And then we hit next. Yes. And then we hit next. Finish. Okay? So what's the cost of the can, Karen?
$30.
$30. Okay. So one can is $30. And again, on this one, I'm using the actual can cost, not the pound. Remember, the other one was one big bag for $900 that we divided by the pound because our unit of measure in this case was the pound, our base. But now our unit of measure is the actual whole can, so we're pricing it by the can. Okay. Then I'll hit OK. And then one last ingredient.
Water.
Okay, now water, it's a very interesting one, okay? Because most people don't purchase the water, although there are some beer makers that buy specialty water. But a lot of times this is water that's coming from the utilities, right? So you can let's do that one. That one's actually good. So I'm going to create an item. In this case, it's not going to be an inventory item because we won't inventory water. So I'm going to create a new item, and I'm going to call a service item, which I'm going to call water. Now this is I'm going to click on this little checkbox that says, this service is used in assemblies and or is performed by a subcontractor or partner, whatever that means. So we click on that check mark, and that enables that item to be used as a consumable non-inventory part that's going to affect my BOM, my bill of materials, on the assembled product. So the cost in this case, and I can create a unit of measure here. Water would be by the gallon, yeah. So I'll do in this case I'll do volume, and we'll do gallon, and then we'll do also, let me replace this one to ounce. Do you measure what is an ounce? Yes, we do. Okay, so I'll do ounce, and that's a tricky one. So that would be how many gallons are there in one? What? In 1 gallon? 128 ounces? Oh, yes, of course. You know that number. That's right. That's absolutely right. Thank you. Absolutely right. Sorry, not that good at that. Okay, so there it is. So I'm going to buy it. In this case, I'm going to buy it or expense it by the gallon. Okay, but maybe in my formulation or something, I want to use them by the ounce. I mean, that's why you would want to have multiple units of measure. So let's say the cost of this, and it's actually really inexpensive most of the time. So I'm going to put that as 58 cents. Now, this stuff is really, really tricky. What am I charging my water against? Usually my utilities bill. Okay, so the expense account of this will be utilities. So this will come from my utilities bill. So typically, we assume that if we calculate our water cost correctly, as our factory consumes water for the factory person, for the admin use and for manufacturing use, that we're not actually charging more than the utilities cost into the manufacturing. A lot of my clients tend not to even consume water as part of the cost, but it is a cost. It is a cost. Yeah, I don't have beer clients, so I haven't run into that situation where I actually know exactly what it is. So now that I created all my my 2 raw materials that were hops and malt, my expense item that's not an inventory part, which is water, which we're charging against utilities. We can also do this for labor. So I'm going to do it real quick. I'm not a big fan of charging labor into these things, but a lot of people want to do this. It just becomes really messy on the accounting side. But if you were wanted to include labor in it, you would have to somehow figure out what is my average cost per hour or whatever of the employees that are working in it. So I'm going to simplify it and create a service item called labor cost. I'm going to click on this little check mark, and the expense account, normally what I would do is I would look for my payroll expenses account, and then I'll create a subcategory under it called allocated labor. Yeah, absorbed labor, whatever, because I don't want it to hit. I want to be able to, like if I'm filing a tax return or something, I want to make sure my W-3s match and all that stuff. So I don't just want to affect any random payroll account. But at the end of the day, I'm actually pulling from labor. So I'm going to do payroll expenses. I'm going to call it allocated labor. Okay, and remember, I just hit colon and then started typing, and then hit tab, and it'll automatically do the sub account for me, similar to what I was talking about earlier. Save and close, and then I can hit the same account here, payroll. Now, this is the most important thing. Cost on labor is always going to be $1. Always $1. Always $1. Okay? Why? Because on your formulation of the allocated labor you're going to put to each of your bill of materials, that's where you're going to figure out your total dollar cost per unit or whatever, and you're just going to multiply that times $1. All right, so don't put any random number here and then try to figure out the quantity. Just put $1, it'll make it much easier. So now we're almost done. I promise you, 5 more minutes and I'll let you go. Okay? All right, so we'll do new, and then we're going to create the inventory assembly. Then we're going to call this one can of beer. Okay? Why? Because we sell them by the can. Let's just assume that. Although when we mix it in this huge
You gotta go
buckets.
through the whole process. You gotta do the barrels.
Right.
They go through
I know,
one
but-
barrel, the next, the next.
Right. Yeah. There may be
There's process.
there may be sub-assembly issues, right, where you have that. But for now, let's manufacture to 1 can of beer. Okay. So then 1 can of beer here. Then we're gonna go to bill of materials. But I'm gonna click on full view just so we have a little bit more better visual there. Full view, and then we're gonna pick all the items. So we're gonna do malt. Then we're gonna do hop. So, and then we're gonna do water, and then labor. Labor cost. Okay. So I got in this case, this is my cost for 1 200 gram can. Okay, so I would have to figure out in my formulation how much of that 200 gram can is consumed to make well, in this case, 1 can of beer, 1 bottle of beer. So let's just say, just for the sake of it, that we consume about, let's say, a bad number, 1/500th of one, or maybe 1/200th of one. So I would have to then, in this case, divide the quantity there. Because my base unit of measure was a whole can, and this is because I'm making a batch of this batch is making 1 can of beer. She was saying that's not how you do it. You have to make the whole big barrel of beer, then you break it down by bottle. I guess that's the correct thing. So we're sort of skipping steps in this case. But let's say, for example, I consume 1/200th of the can. So I do 1/200th, which gives me 0.005, and I will multiply or consume for 1 can of beer, 1/200th of the can of malt. Okay, and I will figure out what the cost is, 15 cents. Now we do the hops. Now, how many hops does it take to get 1 can of beer out? Well, not a pound. Let's say it's 1/10 of a pound. Right? It's probably a lot less than that, but we'll do 0.0, and there's my price, right? 11 cents. Then how much water? Well, definitely not a gallon. Actually, this will almost be an exact science. So it'll be,
You've lost one, so.
yeah, you lost some water. Let's just say it's 1/20th of a gallon. Let's just say that. Okay, just because you lose some water in the process, it evaporates, all that stuff. So that would be 1 divided by 20. And this will all be in your formula, by the way. That formula, you have to tell the client, give me your formula. Beer is different because you're gonna start with big barrels and then go down. But in anything else you do, you need the formulas. I need to know how much of what consumes to get to the final product. And then the labor cost, so let's say, based on your calculation, it takes 3 people to create 800 cans of beers, and these 3 people get paid $20 an hour each, so you have $60. So you divide that whole dollar amount, and it comes out to be 4 cents. So you put it in there, 4 cents. So it's all stuff you do in a spreadsheet separate. Right? Anything that's with labor or water, anything that's not raw materials, you always do it separate. That's allocated. So it comes out to your final cost, right, which is 33 cents. And you always want to make sure this makes sense, right? Also, think about the labor, the landed cost exercise that we talked about. Imagine if we get to this point.
That's huge.
If you get to this point, 0.33 per can, which the client goes, oh, perfect, because I'm selling them for 78 cents, right? What if we had missed landed cost, and that would have gone up by 10 cents or 15 cents?
You also forgot the cost of the can.
Right, we haven't got into the can or the label.
And
Right.
all the other stuff.
The can, the label, the box that it goes into, the stickers, and all that stuff.
All that.
Right. Right. It's 324, so.
Yeah, I know.
Right.
All right. Got it.
So we hit OK. All right. So we hit OK. Then we have our bill of materials, which is our formulation. We have our final product, and we have a product created. Then when we sell it, we'll put it on my sales account, whatever sales account I have. I'm going to put the price here for 78 cents. Hit OK. And then the final process would be to actually build them, to manufacture them. So you would go into inventory, in this case, build assemblies. You pick 1 can of beer. It's not going to let me because what? I have no inventory, right? So the awesome thing about manufacturing is it forces people to have the correct inventory. Okay, so I have to now receive some hops and malt. So just to speed up the process here, I'm gonna enter a quick bill here and receive malt. Let's do 300 cans, and hops. Let's do 2 bags. 2 bags. Okay, from the same vendor, which will never happen, of course. So let's try this again. 1 can of beer. And it tells me here based on how much I have in stock. Down here is a really crucial number. It says here, the maximum number you can build based on your current inventory quantities is 17,000 cans. So it's really important number to know if I were to use all my raw materials. So let's say I'm going to do 10,000. So the minute you hit 10,000 and hit tab or 1,000 tab, all the quantity needed will be calculated. Now, if you're using QuickBooks Premier, you could not change the screen. You cannot change the components on the screen. So you couldn't change on the fly more quantity, less quantity. You couldn't change components on the screen. You have to go back to the item list, change the bill of materials, and then go back and change and do the bill assembly. Enterprise allows you to change this screen on the fly. This right here is just this is the reason why every manufacturing customer should be an Enterprise. Because almost every manufacturing customer needs to fix this on the fly. And I'll explain to you why, especially with consumables, like a beer or a food. Almost always, their measurements, there's so much waste. You know, where they'll consume a whole bag, and then the output is not what their formula said. So they're going to have to now change their formulas here on the fly so they can actually apply how much they actually have consumed. Or substitute a product. Like, for example, if I'm doing this, and it turns out that I didn't have enough one of these, and I had to use some other product, I'll just use it, throw it in the mix, and then add it to the assembly on the fly. So I can consume it on the fly, even though it's not part of the original formula. Does that make sense?
I have a question about that too.
Yeah.
So in Enterprise, you can get a report that tells you what you're missing, or what, like the thing that you're short.
Yeah. Okay.
Is there a way that you can do that in Premiere? No. There's no way to get around that. That's just the migration to Enterprise.
Okay, so that's part 1, right? And are you guys going to go on your break, please? So in part 2, we're going to cover multiple inventory sites and bill locations, FIFO versus average cost, serial lot number, barcode scanning, which we covered briefly, and we're going to try to see if we can get the thing to work and do the warehouse management tool.
No